Well, ladies and gentlemen, first of all, thank you and happy holidays. Thank you for joining us today. Hope to have some information conveyed to you that will be useful on how to use data to drive transformation. Today, your presenters are myself, Jim Deitch, CEO of Teraverde, Lyubomira, and Oliven from Polygon Research. And Mauricio is running the slides, so if you could advance to the next, please. Yeah, so one of the things that we wanted to do was just talk about public and private data. And we'll get a little bit more into what public and private data are, but essentially the ability to take both public and private data provides not only the hierarchy of information, but it gets you to a point where you can use this converged data for enhanced decision intelligence. So you flip to the next one, Mauricio. So the hierarchy of this is really looking at the data and then moving up by aggregating data to information and then taking that information and moving it to decision intelligence, and ultimately that produces some winning results. I flew a couple days ago from San Diego to Miami and was talking with the pilot flying the aircraft beforehand, and we just chatted up for a minute, and I started to ask him about how data is used in the aircraft. And he told me that there's a whole series of sensors on the aircraft that are grabbing data, which is private data to American Airlines. It monitors all the elements of the engine performance, fuel, all the criteria of the pressurization system, et cetera, and relays that back to headquarters, but it's also available to the pilot. At the same time, air traffic control is looking at all the different aircraft in the air and using that information to coordinate arrivals, departures, and separation. So that's public data. You can see that data on a variety of apps. Bringing that data together then allows the aircraft to kind of monitor its performance, but also to integrate into the overall air traffic control system for safe travel. So that's an example of public-private data. And when that pilot's flying and he sees that we had a tremendous tailwind on my flight from San Diego, he saw he's going a little bit fast. So he pulled the throttles back, slowed down a little bit, saved some fuel, and arrived at an initial fix at exactly the point that he was supposed to enter the traffic pattern into Miami. So that's a little bit about how an aircraft and an airline uses public and private data. So perhaps we can now focus on the mortgage banking side. So Mauricio, take us to the next one. So what we're going to spend our time together for the next 50 or so minutes is really look at a couple of use cases in the lending side. And we're going to start with static presentations of data that kind of combine some public and private data. Then once we do those static associations, we're going to take you to live associations using dynamic data. So some private data on the lending side, some public data associated with private data, and then ultimately Greg and Lyubomira are going to take you through a wide variety of public data sources. Then that discussion is really how you leverage that data. We'll talk a little bit about the tools used today, and then you can pose any questions at any time using the chat feature to ask a question, and Mauricio will accumulate those questions. And Mauricio, if you think it makes sense for us to address them while we're on topic, just please interrupt. If you'd like to hold them to the end, that's totally up to you. So that's how we're going to spend our time today. And again, appreciate all attending folks, and some of that expression of appreciation will be two things at the end. You'll receive a copy of this particular presentation, as well as a broader white paper from Hum Division and essentially a playbook from Teraverde. So that will be our thank you for attending today. So Mauricio, move the next one. So here's an example of using public and private data. This is a static association But what we're doing is saying for a bank that has both mortgage and deposit operations, one of the clients asked us to go through a variety of states and just look at what their deposit market share was, what their bank mortgage banking share was, and then look at the difference between deposits and mortgage, with the thought being that you can get better mortgage presentation by leveraging the deposit market share. So what you see on this screen is kind of a map of New York and the counties, and looking at the concentrations of deposits of this particular bank in a number of counties. And of course, we've anonymized the data to protect the particular clients. So we're looking at deposit market share, which comes from the FDIC. We're looking at mortgage market share, which comes from HMDA. And then we're calculating the bank's private data, which is how much deposit share they have and how much mortgage share they have. And then looking at the difference between deposit and mortgage share, saying that that's an opportunity most likely to work with households that have deposit accounts that don't have mortgages. So that was the beginning thesis of this. And then as we dove into it, you get into the specifics of the households, the specifics of who the competitors are, so that you can look at who has market share in any particular county and infer from there what the opportunities are to penetrate greater mortgage penetration by using that data. So that's one static thing. We'll show you a little bit more dynamic items in just a moment. The next slide takes a look at the market share in a particular state, looking at a client company and then one competitor, Quicken. So in this case, it's using public data and private data. The private data kind of looked at all the credit box and all the other elements, which I won't share here for confidentiality purposes. But by taking HMDA data as well as private data, we could infer that this particular IMB that happened to have operations in Tennessee had a very high percentage of home purchase, whereas Quicken had a very high percentage of refinancing cash outs. And then we got into some of the more details of what were the credit boxes for the private side and what opportunities would we have to perhaps work and understand the Quicken client and how to better approach the Quicken client. So that's an example of using a combination of private and public data. And then the next one is looking at the differences, again, taking the public data, which is the map of the United States, and kind of visualizing and dropping all the elements into it, looking at the correspondent channel for this particular time period, the retail channel, the credit box, and just getting a sense of, against the geography of where this is occurring in a visual way, what the correspondent and retail sides are. It goes deeper into profitability and penetration by loan officer and by correspondent. Can't show you that particular data, just kind of wanted to show you the top view. So these are three static elements that show private data, private and public data, and how you can merge it. So with that, Mauricio, thanks for moving that, and just invite Lyubomira and Greg to talk a little bit about how public and private data might be used in the lending side of the business.
Thank you, Jim, very much. And thank you for everyone on this webinar. I think this is an important conversation that we are having today. And I'm really pleased that I'm part of it. And I hope that at the end of it, all of us would have learned something and would take some useful tips to our organizations. I am Lyubomira Buresch. I'm the founder and CEO of Polygon Research, mortgage data science firm. And the slide that we are looking at right now is the slide that I cannot emphasize the importance of more of defining the vision and business outcomes for any use of data or data strategy. How you combine your private and public data has to begin with a very clear and compelling vision, how you would like to use your data, what kind of business outcomes you would like to drive. this is very important because if you don't have a clear vision and clear articulation of the use cases, you might get the wrong data set. You might go down the path of collecting data that may not be as useful to you. Actually, 3 weeks ago, I was sitting in a meeting with the national sales executive of a top independent lender, and he told me something that really made me pause and think. He said to me that he has more data than he knows what to do with it. And that really speaks to the slide and to the conversation we are having today. What are our use cases? We have so much data, sometimes we are drowning in data, but we still don't find answers to our questions, or we can't find the data that would help us drive strategy in the organizations. And in this slide, we have highlighted 5 use cases or business outcomes that typically we have seen in our clients. That's what they would like to do. The first one is market share. Many lenders are trying to build their sales strategies, even sometimes hiring strategies around capturing, growing their market share in a particular geographic segment. Sometimes it is a product segment, sometimes it is a borrower segment, or a combination of all these factors. So this is one use. The next use case of using data is product development. Often data is needed to understand the demand for a product, the features of a product, but not in general, but in detail and specific to the market territory of the lender. Often we have seen this desire, especially in this year 2020, that many lenders want to position themselves as lender of choice in a specific demographic segment. Some want to be the lender of choice for the Hispanic segment. They want to capture the share of hearts and minds of those target borrowers, and they need data that would tell them what kind of products, what kind of type of borrowers they are in their markets in order to tailor their product offerings, their marketing communications, and so forth. Of course, entering new markets is always a strategy for mortgage lenders, and they need information about the size of those markets, the growth rate in those markets, the competitors in those markets. And finally, the 5th use case that we're highlighting here that we have also seen our clients use and drive and need data for is how do you grow, how do you first recruit, train, engage, grow, and retain your best loan officers. And for that, often they would like to communicate the value proposition of the lender to their loan officers, educate them how to communicate with borrowers, and they need data for that. Now, the big question is that we want to know is what data sets can bring those visions or the vision for business outcomes to life. And not only that, but really use the data that would be used for strategy to drive unique competitive advantage for the lender. And Mauricio, let's go to the next slide. Here is a type of data that many of us are familiar with. It is a combination of this private and public data that is being generated every day. Hundreds of thousands of applications are taken daily in the United States, and they generate this type of data. Data around the mortgage note, the loan ID number, the type of loan, the loan term, origination fees, closing costs, unpaid, the average loan size, data around the property. For example, what property type? Is it condominium? Is it a duplex, single family? What's the value? What is the original property value? What is the current market value for this particular property? Number of units and so forth. Many of the data pieces that are generated on daily, hundreds of thousands of them, they exist in both spaces. They're proprietary data that exist in the LOS systems of mortgage lenders, but they are also disclosed to the regulators under Disclosure Act and laws that the government requires that the lenders comply with. And Mauricio, let's move to the next slide so we can see what type of disclosure acts exist that have some elements of the private data. For the mortgage banking industry, it is the most important data set is the Regulation C, or Home Mortgage Disclosure Act. The HMDA data is a comprehensive data set that has many of those elements that we saw on the previous slide, but even many more. The only difference, actually there are many differences with proprietary data. First of all, there is a lag in release of the mortgage of the HMDA data to the public. Usually it comes 90 days after the end of the closure of the calendar year, while proprietary data is always available to the mortgage lender on a daily basis. But the HMDA data is a comprehensive data set. It is anywhere between 90 to 92% of all mortgage origination activity, which includes applications, it includes a variety of, and then the dispositions of those applications. We see between volumes of roughly 17 and more million transactions per year that are disclosed in the HMDA. And we see that in terms of volume, dollar volume, that translates into $4 trillion volume. Of course, the 4 trillion includes not only single family originations, but it also includes multifamily originations that are subject to disclosure under HMDA. Overall, for the financial services industry, we also have the CRA data. This is very important data set for the banking world. The CRA is much more limited data set than Regulation C, than the HMDA data, but it still has very interesting data that can be used in order to understand how a bank is serving the credit needs of the communities where they have branches in. We have about 700 reporters under the disclosure for CRA. We have information about small business lending in that data set. We have lending to community development institutions, lending to small farms. There are roughly more than 7 million CRA transactions. They are both originated and purchase loans. The limitations, of course, of the CRA data is that it doesn't have the full application cycle as the HMDA data does. I didn't spend a lot of time on the other data points in the HMDA data because we'll see them in action later in our time together today. But it does have very important and interesting data points that are used in all of the use cases on the slides before that we've seen. The other two data sets on that slide were the census data and the FDIC data. The census data comes from the one that we found very valuable for financial services industry and for analyzing markets and demographics is the American Community Survey. It is a 1-year survey sample, and the microdata produces a statistical records on over 328 million people and over 127 million households, and it has many different interesting demographic and housing characteristics. And finally, the FDIC deposit data, which is also disclosed to the public, is very interesting because, as Jim showed in the first slide of the use cases, the static use cases, it discloses information about branch location and branch deposit by dollar volume. And as Mauricio showed us the next slide, the two data sets of those four that we think are supercharged are the HMDA data and the ACS data, the American Community Survey data, and we are not alone in that characterization. According to CFPB, the HMDA data and reports are the most comprehensive publicly available information on the mortgage market activity. And the ACS data, according to Brookings, gives us a comprehensive picture of population, housing, and the economy at every level in the US. So this is important. I spent a little bit more time here to explain to you what you can find, the wealth of information and data that is available to the public. It's open data through government sources. And I think we can move on to the next part of our presentation, but hopefully you would take some notes here from the value of those data sets, and we'll see in action what kind of insights you can drive from those open data sets.
Awesome. So, Mauricio, if you can let me screen share, I will come back. Mauricio, you have to let me screen share. Awesome. So, Mauricio, do you have my screen right now? Am I sharing effectively?
Jim, this is Greg. We don't see it yet.
Okay.
And we can go out of order if you want, and I could try to jump in and do our screen share, but just let me know.
Yeah, whatever you want. I just, Mauricio, I just can't screen share at this point, so it says you've disabled participant screen sharing.
Yeah, I'm getting the same thing, Jim.
Jim, you can go ahead and try again.
Okay. Is that, can you see that, Mauricio?
Yes.
Awesome. Thank you so much. You know, I had a similar thing with the American Airlines flight that I was flying on. They had a little bit of technical trouble, but it was a lot more stressful being at 37,000 feet than being on the ground. So I'm going to show you three quick things. The first is a secondary marketing use case. This is one of our clients that uses the ability to analyze data and show it to a particular bank by taking the public data that the bank has from its call reports and merging it with the private data of this particular lender that's looking to put together a transaction. So I'm going to take you through a hypothetical transaction of how this is merged together. And in this case, this particular bank that they're interested in working with has only an interest of loans in the Northeast. So if we look at the Northeast, we can see the loans that are available there. There's about 537 million. So to then carve that thing down and say, this particular bank is only interested in conventional, so we're going to carve the conventional down. And what we're going to do then is jump forward and say, here's a loan pool that essentially could be used by this particular target bank. And what this particular loan pool would do is have about 280 million in it, and the prospective client they're thinking about offering it to would be a bank that would be in New York, and I'm going to choose here just Sterling National hypothetically. So this is all of the data coming in from the call report that's publicly available. So what I can see is what Sterling's balance sheet would look like as of the end of the quarter, and what it would look like if this projected loan sale were done to it. And I can then go forward and use that same data to say, as of last quarter, what would Sterling look like without this sale? What would they look like with this sale in terms of total interest income, total loans, and what this would do to their portfolio yield? And then ultimately show what it would do to concentrations, meaning if we added 1 to 4 loans, you'd increase the concentration of 1 to 4 loans, but you'd decrease the concentration of everything else because you're moving the denominator upwards just with the numerator in the 1 to 4 family. So in this way, we can look at what the impact on tier capital would be. We can look at the impact of the interest earnings. And that's a quick way to show that all of that public data of what's in the call report, if everything here is a rich source of call reports for banks, can then be used by a mortgage lender to say, let's go show Sterling this particular portfolio and show the CFO of what the impact of this would be quarterly and going forward. So that's a way to use public and private data together. I'm going to show you just a look at some private data. So what we're going to do here is look at just kind of by branch. This is, again, anonymized data from one of our clients, and they've agreed to let us use it on an anonymized basis. So it's a subset, all the names, all the data. It's real loans, it's just everything else has been anonymized. So in this case, we're looking at volume, but what they're really interested in doing is looking at contribution to profit. So by doing that, I can look at by branch contribution year to date. I could look at any particular branch and see the elements of what that particular loan officer is doing in the branch. So in this particular branch, I'm looking at their mix, and I'm looking at the particular loan officers that are in that branch. And if I wanted just to look at Sherry Sampson, for instance, our fictionalized loan officer, now I'm looking at her production and her branch in terms of contribution margin year to date. So that gives me a quick way to really evaluate the contribution generated on both the branch and the micro scale. But I can also go through and say, let me look at buy-sell. So in this case, what I'm looking at is the branch best efforts execution, which is in blue, and then the actual secondary execution, which is in the kind of the orange color. And I can see what that looked like, and as you'd expect, during May, June, July, some of those executions on the secondary sell side got pretty wide because of some of the opportunities in the market with margin. So now I'm looking at what's actually happening to my corporate margin, my branch margin over time. So this is the way to look at that. And then lastly, I could go through and monitor by looking at what's happening to my pipeline. So now I'm looking at all of the particular loans. I'm looking at locked pipeline, locked margin at the best effort side, and the active pipeline revenue that would come through when these loans sold. So I can look at this in a variety of different ways. I can look at it by month. I can look at it by last month and get a sense of how this private data is going. And then we have access into the individual loan transactions. So if I just wanted to look at one particular branch, I could do so by selecting that branch, and I'm just going to look at all, in this case, the branch 32 executions. The other thing that I will let just kind of a merge of public and private data, again, a use case from one of our clients. This particular client has some activity in both California and Florida. And one of the things they are able to do is look at their pipeline and say, what would happen if a tropical storm was coming in from the Caribbean into the Florida area? What's going to happen to my pipeline that's there? So I could go through and just select just the areas along the coast to look at what's in the active pipeline there. And by merging, and there's actually a weather overlay for this, but I just don't have it available on the demo site. So here's all the loans. There's 62 million that was in the pipeline that is that were in a potential East Coast tropical storm. If I wanted to go in and look even a little bit further and say, you know, the forecasts are such that we're going to just look at, you know, one of these counties in southern Florida. If I looked at Palm Beach and the related county, I could zoom in there, and then what I'm going to see is literally just what that looks like with respect to that collateral. So now I'm looking at where the loans are, and I can look at, for instance, in North Palm Beach, how close any of the particular properties are to the ocean, and get a sense of whether or not I need to contact these customers and get a sense of where they are, and say potentially settlement has to be postponed. So by taking this public data of what's going on in the weather, I can go through and I immediately identify my pipeline. I even say, I just want to look at the purchase pipeline. So show me just the purchase pipeline. And in that case, I get two purchases that are literally right on the beach. So probably want to work with those. So that's a quick look at how we can use geographic and weather and environmental information. We can look at the profit contribution internally, and then we can look at going out to a prospective customer that would have a lender go to them and make a really informed opportunity to offer loans for sale to a depository by modeling what it looks like using the public data that's available to them. So with that, I'm going to stop and invite the Hum Division team to kind of get on their opportunity to share how the public data in Hum Division can be used. So Greg, Lyubomira, the show is yours.
Great, thanks, Jim. I'll share my screen. And we'll jump into a few use cases that really dovetail with the presentation that Lyubomira gave, and take a particular focus into those two supercharged open data sets that we talked about, the HUMDA and the census data. Mauricio, I think I need a little help now with respect to screen sharing.
Yes, Jim, you have to make Greg the host.
While we're working on that, I'll just sort of lay the context a little bit. You know, we've talked about HUMDA. Oh, thank you. I think I see the message now. And I'll share. All right, great. Thank you, Mauricio. We have talked about the HUMDA data, and in fact, we've got an entire app that really takes a deep focus into HUMDA data. HUMDA comes out, as Lyubomira noted, with about 17 million or so transactions every year. And what we're about to look at is 5 years worth of that data. So we've got over 75 million transactions that we're looking at, but all in a single context. As we jump in and look at our use cases, you'll see that most screens will default to the most recent year of that 5-year range, which is 2019. So the first use case is basically about how to expand your market share. And we thought it'd be useful to see an example of a lender, a real live lender, who has actually done so. So I'm going to apply a bookmark, and bookmark will do a couple of things. It'll put a couple of filters on and take us to one of the sheets in our app. I'm going to minimize some of the Zoom stuff here. And our app is laid out in several sheets. Right now we're in lender snapshot. And we've selected the lender United Shore. As we can see here, there are over 5,000 lenders in 2019 reporting HUMDA transactions. And we've applied one additional bookmark, and that is 1 to 4 family properties as far as what's securing the loan. So that's our focus right now. And our lender snapshot sheet gives an idea of what's going on in the market for that lender. We can see overall United Shore's rank was number 2 by production. If we flip to dollar volume, they're number 3. We can toggle that back and forth. And by the way, we're looking at originated loans. We can look at the entire loan life cycle, but we're defaulting to originations. But let's rewind the clock a little. Let's do a little time travel. Go back to 2015, and we can see that their rank was considerably lower at that point. And so this is indeed a great story of expanding market share. And if we take a note of a couple of the KPIs at the top, their rank was 20. Their overall market share in 2015 was less than 1%. And the percent of FHA and VA loans, as far as the overall, the breakdown of the types of loans they were selling, was a little over 9%. So I'm going to clear that 2015 filter, and that'll take us back to 2019 by default. And take a look at the jump along. We've seen the rank, of course. The market share had a 5-fold increase. But the percent of FHA and VA lending had a similar multi-fold increase. And so that's something we want to key in on and say, well, that indeed seems to be a big part of the story of this huge increase across the 5 years. So I'll pause here and just sort of think about the value prop of what we're looking at with Hum Division, and that is that there are many ways you can sort of slice and dice chunks of this data, but it gets to this certain threshold of size and complexity that what we're offering here is the ability to sort of not have to worry about the data modeling, the data acquisition, the data management, the data quality. We interact with the CFPB on an ongoing basis to make sure that any questions that we have, we interact with them on, make sure we get it right. And so really what we're offering here is a way for you to jump in and bring your own domain expertise directly to a mature app so that you can apply filters like this and really drill down to your use case. But let's take a little bit of a closer look at this use case while we're focused on United Shore. We see that they had apparently a deliberate intent to expand their government lending. But let's take a look. I have a second bookmark here I'll apply. We'll take a little bit more of a fine-grained look. What you all may be well familiar that in 2018, the number of HMDA data fields reported expanded greatly. And so we have a much richer data set from 2018 forward. So we're now scoped based on some of the filters that I just applied to that time range now for the most recent 2 years. So it's a little bit of an expansion of the 1 to 4 family filter that I had on before. Now we're specifying not primarily for business, not open-end, not reverse mortgage, and lien status of secured by first lien. And we're still looking at 1 to 4 units. So we have the ability here to look at a little bit more of a breakdown of their market share. This bar chart in the middle looks at market share. I'll just briefly expand that. And we can see that we're looking at here by neighborhood income group and get a sense of their market share as filtered throughout those different values within neighborhood income group. It's the sort of the LMI perspective. You can look at this by state, see where they're have the biggest penetration. You can drill down to MSA, and indeed to any of these dimensions that we have in the data, property value range. And it just gives us a better sense of their strategy and how they've been able to excel. I'll minimize this and look a little bit further at the some of the charts on the bottom of the sheet here. Let's see if we drill into a younger age demographic, and let's go to loan purpose for, oh, that's where we are actually. Let's go to home purchase, in fact. And what I'll point out here as we continue to take advantage of some of the ability to drill down and make our filter set more specific, that as we do so, we see that in this market segment, United Shore is actually #1. So again, just with our first use case of how to think about market share and a case study on how market share has been increased, we can get some clues as to how United Shore achieved that goal. So that's first use case. Let's shift gears and think about a second use case. I'll go to a new bookmark, which will take us to a new sheet. And this use case has to do with training of loan officers. This is one of the use cases that Lyubomira shared in the beginning. And this is a challenge many of you likely have, where you're perhaps even trying to acquire new lenders, or you have a team of lenders brand new to your organization, and you want to get them up to speed. And so really what we offer here is the ability to get the lay of the land and start to understand lending patterns in the broader market, or indeed drill down to your past performance or competitors' past performance. Let's take a look at the state of Texas in this hypothetical example. And we'll take the lasso and select some of the counties around Harris County, where Houston is. And we'll drill down to the census tract level. And we can really see the loan origination performance at a per census tract level in 2019 here. So let's say as we continue to get the lay of the land, we want to educate our loan officers about, sort of the real fact-based market intelligence perspective about performance in the markets that you're assigning them to. Some of the opportunities we have here is to look at performance either by production or by dollar volume, and we've seen that before. But also to think about where you're getting applications. This is sort of the top of the funnel, and it might have to do with brand awareness, might have to do with local offices that are more successful with their promotions. But if we go back to originations and look at this KPI right underneath the map, see what our origination conversion rate is, a little bit under 60%. So one of the great things about the HMDA data is that it allows us to see what the other outcomes were, and we might go exploring that and look at, well, are we having withdrawn loans? Yeah, pretty good chunk of that. We might start thinking about the efficiency of our conversion, efficiency of our marketing spend, et cetera. Let's go back to originations and take a look at the product bar chart over here to the left. And let's look at loan purpose. And again, we can apply a filter for a single lender like we've done in the past, or look at the entire market, just see what the opportunities are. This market is dominated by home purchase, but the government lending has a significant presence as well, a robust presence. We can look over pricing that's been occurring in this market. You can see the distribution well, right now we're looking at rate spread range. You can see what that curve looks like. We can see the same thing by any number of measures that are in the HMDA data. We can see the loan amount range, where the sweet spot is, and also the fact that there's quite a long tail of expensive properties that loans are being originated for. You can get into some of the credit box pieces of information like debt to income or CLTV, and again, just orient ourselves to what has been going on and what the norms are in the market right now. So in addition to the price, let's go back to the product and take a look at the loan type here. Scroll down to the bottom and choose loan type. We're looking at the mix. We can look at the actual raw numbers as well. And let's select FHA, take a deeper dive into one of those government lending categories. And let's take a look briefly at our applicants. We haven't talked too much about the applicant distribution, but we have all of the data points that come with HMDA. We have minority status. We drill into that value. We can see the detail that we drill down to underneath minority detail. We saw it briefly a moment ago. We'll go back to age of applicant. We can see really the range of where the loans have been occurring in the market, and on the flip side of that, what some of the opportunities are. Well, this I think is a good segue as we're looking at demographics to flip over to our next app and our final use case. Next app we're looking at is Census Vision, and this is our app that takes a look at the second of those two supercharged data sets we introduced earlier. And this is the American Community Survey data. Lyubomira gave an overview of it, but just getting our arms around it a little bit more broadly, this is a survey that goes out continually every year to 3.5 million households in the US. And so if you think about the scale of that sort of survey, it's just massive as far as a statistical sample. And there's no other survey that's quite rises to that level of scale, of statistical rigor, and of really utility. It has dozens and dozens of data points on people in the US and households in the US. So let's just take a quick look at that as we're teeing up our use case. We have a sheet that looks at population demographics. So this is where you have the ability to think about people that you're serving and where your markets might lie as you understand your markets. we could just briefly touch on the industry sheet, where we start to think about your workforce. We can see detailed breakdown by occupation, by salary range, wage income range in all of the local communities in the US. And we can come to the final sheet where we'll talk about our use case, actually, affordability. And here's where we might think about our final use case, which is how to expand our markets. You know, we saw in HMDA an example of really looking at a lot of great detail about existing markets, but let's say we want to get into new markets that we're not in, and how can we think about those? Well, one of the first things to think about is, well, who's renting right now who might want to buy? This doesn't speak to refi, but let's think about home purchase, and let's think perhaps about new home purchase, first home purchases. So let's filter a little bit on some of the younger demographics. And let's go into a particular market again. I'll go let's go back to the Houston area as our filters update. Go to our census filters, and we'll choose the Houston MSA. And we'll go back to our affordability sheet. So now we're looking at renters in a certain younger age demographic in Houston. And let's take that a little bit further. And in our donut chart here on the right, let's go to units and structure. And let's look at people who are renting single family. There's a couple of different categories. There's single family attached and single family detached. Let's make sure we get both of those. So I'm hunting around for the second one. Let's stick with just the one that I can find. Okay, we'll pin that. So now we've got a sense of the size of the market. We're looking at a little over 100,000 rented single-family households in the Houston area. And so again, this is just a way to start thinking about market potential in a market you might want to get into. We have a lot more detail in here. We can look at the breakdown by family income brackets. We can see what neighborhoods the rents are most expensive in, and we can start to think about how to intersect our marketing efforts with this sort of information. I think in wrapping up our quick walkthrough here, I don't think we have time to go into our third application, but I'll just note that we have yet another application that focuses on depository lenders who are doing CRA lending, where we have the ability to blend multiple open data sets, the CRA lending itself, to see how lenders are conducting themselves with business and small farm lending. But side by side in the same app, we bring in the most recent year of HMDA data to look at consumer lending. We bring in ACS data to look at those same communities and contexts that we were just looking at, as well as indeed the FDIC branch, both branch and deposit concentration information. So this is a great example of where you can apply multiple data sources to understand your performance and the performance of your competitors in context. Mauricio, I'll pause there and turn it back over to you.
Thank you, Greg. If you can make me host again, I'm gonna go back to the presentation.
Sure. Give me 1 second to get back to Zoom here. There you go.
Awesome. So, ladies and gentlemen, really appreciate the time. Wanted to know if any of you have questions, you can type them in the chat box and we'll certainly go through it. One of the elements that you saw today is Home Division. That is available from our friends at Polygon, and Coheus is a Teraverde product available from us. In appreciation for you spending time with us, you'll get a Home Division brief on data strategy, which will come to you by email, no need to do anything, as well as a Coheus Lender's Playbook to lever internal data, and we'll also provide that to you. and really appreciate your participation. So Mauricio, any questions, or are we good to go?
I didn't get any questions, Jim.
Awesome. So I guess we'll credit that to Greg doing such a fantastic job with explaining things. Contact information is there. It will also be on the deck that we'll send to you. For all that was here, all that attended, thank you so much. I really appreciate it. Wish you a very safe and happy holiday season, and hope we'll get a chance to chat certainly early in the new year. So Greg, Lyubomira, thank you so much, and we'll sign off. Thank you.